Alright guys, so welcome back to our next video whereby I'll be sharing two of my proven profitable trading strategies for you to profit like a pro. Alright, so are you ready? So let's go right into it. So the first strategy is called the trend sniper strategy. Okay, so this strategy is very straightforward. Basically, you are aiming to ride the trend as high or as low as possible and as long as possible. Okay, so why ride the trend, right? Because as long as you are riding the trend, right? For example, this example is fantastic because if you see, if the trend is going up and if you buy at every juncture, right, you realize that even if you are wrong, you'll be wrong smaller in amount and lesser in amount as well. But as long as you are going with the trend, with the trend, right, you will see that you will be able to profit more or win more compared to going against the trend. Right, so this is actually one of my favorite analogy and representation of how you show that, as long as you follow the trend, you might be wrong sometimes, but more often not, the times that you are right, you will earn more than the times that you are wrong just by following the trend. Okay, which is why they say that the trend is a friend. And if you look at the setup, right, we only trade in these two phases using my trend sniper strategy, which is during the advancing phase, whereby price is moving higher, or the declining phase when price is moving lower. So of course, there's another two phases called the accumulation and the distribution, but we don't trade during these two phases. Why? Because we don't want to be trapped in a a ranging market where price, is ranging with any direction, right? So for my strategy, the market needs to be either advancing or declining, right? Moving higher, trending strongly, or moving lower, trending strongly. Okay, so let's go right into it. So the setup, very straightforward, right? We will use EMA 20 and 40 indicator, right? So EMA basically means the exponential moving average. So on the left, you will see that that's a setup for trading view, right? You can go to your indicators, start in EMA, open up two EMAs, one of them the length, put it 20, the other put it at 40. And then for the 20, put it as the red line, and 40 put it as the blue line. On the right, if you want to use a MetaTrader, you can as well. Open the moving average, change your MA method to exponential, and the period to 40 and 20 as respectively. So some people actually ask me, hey, Luis, right, so why EMA 20 and 40? The only thing I can tell you is because it works, right? It's because it works, and that's why I stick to it. So there are people using, EMA 15, 8, 10, 20, 50, 100, 200. So there are many, many users of EMA, but what you need to do is find what works for you and stick to it. And more than often not, right, it's never the strategy. It's always the risk management, right? Because for a trend riding strategy, you don't need to be right 80% of the time. There's no need to be right 50% of the time. All you need to be right is maybe 30 to 40% of the time. And why? Because the risk to reward is a lot larger than that, right? So for every risk, my risk to reward ratio is 1:3 minimum. What does it mean? So if I were to lose 20 pips, right, or if I were to risk 20 pips, the minimum amount I should profit will be 60 pips. So this means that every time I win a trade, I'm always 60 pips and above, or I'm 3:1 above my losing trade. So for every one winning trade, I can afford to lose 3 winning trade at least. And of course, the 1:3 risk reward ratio is the minimum. So more often not is more than that. Okay, so this is a setup that you need on either your trading view or MetaTrader. Next, you will need the MACD as well. Okay, so MACD basically stands for the moving average convergence or divergence, right? And use these numbers. Go to a MACD, either on trading view or MetaTrader. The default isn't 13.39.9, right? So I suggest you change the numbers for your MACD to 13 for your fast EMA, 39 for the slow EMA, and 9 for the MACD moving average, the SMA. Okay, so on the left, the trading views, likewise, right, change the values as well to 13, 39, and 9. And on the right, the MetaTrader, I think it's very obvious already. Okay, so on the left, the trading view, right, you will see that the fast length is 13, slow length is 39, and the signal smoothing, right, basically the MACD moving average is 9. Okay, so of course some people might ask, hey, why didn't you use the default MACD? So for a trend riding strategy, right, I like to use the 13.99 MACD because it's slightly lagging, right? It will not give me a signal too early, but I cut my trade too fast. Okay, so I like to use 13.39.9 because it's slightly more delayed, right? It doesn't react as fast in a sense. So the setup, I only trade on the H1 chart for this specific strategy. Okay, the currency pairs, right? I use mostly the currency pairs that we trade on is mostly the ones that trend the strongest. So in actual fact, right, the pound dollar actually trend the strongest historically. But all these currency pairs works as well. And what you realize is that most of them are the major currency pairs as well, right? But these are the pairs that usually shows a lot of trending opportunity. Next, we have the setup. Okay, so this is on trading view. So straightforward, right? I open my EMA 20 and 40. I open my MACD, and that's it. Okay, so at MACD, EMA 20 and 40. So in this example, I have my RS open as well, but you can ignore that, right? You will need that. So all you need is MACD 13, 39.9 for the settings and your EMA 20 and 40. Okay, next. So the trigger. So when do you enter a long and when do you enter a short? Straightforward. When the EMA 20 crosses, so EMA 20 is a red line, right? EMA 20 is a red line, EMA 40 is a blue line. So when EMA 20 crosses above EMA 40, right, when that happens, you don't enter a trade yet, right? The trigger to enter the trade is when price, for example, you can see example, price higher, right? EMA 20 cross higher than EMA 40, and then price move up higher. We'll only enter the trade when price retrace and touches EMA 20. Okay? We only enter a trade when price retrace and touches EMA 20. And likewise for the short, you can see that when EMA 20 crosses below EMA 40, we don't enter the trade straight away. We wait for price to retrace back higher, touches your EMA 20, which is currently now below your EMA 40, and then that is where we take a shot. Okay, so very, very, very straightforward, very simple, right? And actually for strategies, right, the simpler it is, the better, because you want it to be very objective and not subjective. Subjective means when you look at a chart, the strategy might tell you, oh, sometimes you can open, sometimes you shouldn't take the trade or whatnot. So those are very subjective. It's based on a lot of human intuition. But for objective strategy means once price hit this level, once price retrace, once price touches any of the line, the indicators, we exit or we enter the trade. Very, very objective. And for strategies that you want to learn, it has to be objective, right? So that if there's a trigger, you know when you should enter, you know when you should exit, and you know where to set your stop loss. Okay, and in this case for the stop loss, we'll set it 15 pips below the EMA 40. So for the buy trade, right, you measure from EMA 40, you add another 15 pips. So that area, right, is your stop loss. So basically 15 pips plus your EMA 40 and all the way to your entry price, right? That is your stop loss. Okay. And of course, likewise for the sell trade, right, you look at your EMA 40 and another 15 pips. That distance from your entry price all the way to that level is your stop loss. Second target price, right? So how do we determine? Okay, so we will close the trade when the MACD line. So you look at the MACD, you set the 13.39.9, right? You will see two lines, right? So as long as the MACD lines crosses each other or touches each other, right? Or cross will be the better word, crosses each other, that is when we will close for our secondary price. So how does this usually happen? So once price hit your first target price, more than often not, I suggest I take 50% of my profit. I shift my stop loss to break even, and I ride the trade until the MACD line crosses each other. Okay, so in between that, from your first target price or from the entry price to your first target price, it doesn't matter how many times the MACD line crosses each other, right? What we want is we must hit at least 1:3 first. After that, then we will close. So after the first target price is hit, we will then close the next time the MACD line crosses each other. Okay, so the MACD line can cross each other during the first target price, but it doesn't matter, only during the second target price. So for example, in this example, I would say that, when price hit the 90 pips profit, which is our TP1, we will then set an alert on MACD before when the MACD line crosses each other, right? Which is why I say that TradingView are actually very useful, because you can set alert when MACD line crosses. Okay, so let me go to an example. So this is a Euro-Dollar H1 chart. Okay, Euro-Dollar H1 chart. So you can see that EMA 20 is now above EMA 40 on the left. Okay, so which is why I have a tick, right? Because it passes my trigger, right? So it's time to look for a retracement to touch my EMA 20. So the next one, so as we continue for this chart, right, Euro-Dollar long H1 time frame, you can see that a price actually retraces back and touches my entry price, right? So a bit hard to see, but if you zoom in, you can see that the entry price of 1.058 is touched. Okay, and that is where we'll enter our trade. Next, we will then set our stop loss, which is 15 pips below the EMA 40. Okay, so EMA 40, you add another 15 pips, right? So that is our stop loss. And if you calculate from the stop loss all the way back to our entry price, right? Because there's a gap between EMA 20 and 40, that is a gap that we need to include as well for our stop loss. So in total, the stop loss here is 20 pips, because the gap between EMA 20 and 40 is actually 5 pips. And then we include another 15 pips from EMA 40, we add 15 pips, right? So that's 20 pips here. So once we have stop loss 20 pips, we can set our target price. So our first target will be 3 times the stop loss, which is 60 pips here, right? Because stop loss is 20 pips. So first target will be at 60 pips, right? So I also said, I also wrote in the price level so that it's easy for you to visualize. Okay. And then what happens, right? So price move up higher, price didn't hit our stop loss, which is great, right? So we will close our trade when price hit our first target price, which is at 1.064. And as you can see in the chart, price indeed hit our first target price. And then price actually move up even higher, right? And continue moving higher. And so from then, we already shifted our stop loss to be our entry price, which is at 1.058, right? So here I didn't show, but you will just have to follow our trigger as set up for stop loss, right? So shift your stop loss to just slightly above 1.059, for example. I don't like to put it at exactly the entry price, because sometimes there could be slippage, and it's good to know that you earn $1 or $2, right? Even though you didn't get the full profit from the trade. So shift stop loss to break even after your first target price is hit, and then we will close when the two MACD lines crosses each other again, which happens here, right? You can see that the MACD line crosses each other, and that is where we will close the trade. And of course, some people may ask, hey, it's unlucky we couldn't close it at the top, at the extreme top. But let me tell you, in the trading market, right, it's almost impossible to close it at the top, right? So what you want is that for the market to trend as far as you can, and then you close one, it start to retrace or it start to weaken. Okay, so this is what we have. So first target price, we got 60 pips. Second target price, we close it at 1.068, which is 100 pips. So another 40 pips extra, right? So all in all, in this trade, we have earned 100 pips. But of course, we close 60 pips for 50% of the profit, and of course, another 40 pips for 50% of the additional profits. All right. So let me give another example. Here we look at pound dollar long H1 chart. So likewise, EMA 20 crosses above EMA 40. We wait for price to retrace and touches our EMA 20, which happened here, right? And then we enter a trade. So we enter a long at 1.19, which is where the price touches the EMA 20. Next, we fix our stop loss, right? So likewise, the stop loss is 15 pips below EMA 40 line, which is 25 pips here. Okay, so 25 pips. Then we'll put in our stop loss, sorry, our target price. So the first target price is at 1.19750. So basically 25 pips, we times 3, which is 75 pips here for the first target price. And then we set our second target price, or we close the trade once the MACD line crosses each other, right? So it's not touched, but it must cross each other. So as you can see, once we take our first target price, once we take our first target profit, we take 50% profit, shift stop loss to break even, and then we'll wait until the price crosses. So you can see that there's two instances whereby the MACD line almost crosses or touches each other, but the important thing is it must cross, right? When the MACD line touches each other, it does not count. It must cross, right? So you can see that when price cross, I close it at 1.21 level. So all in all, right, I profit 200 pips, right, from the initial potential 75 pips only, right, because I ride it as far as I could. But of course, price might move up a lot higher, but what we can do is we can enter another long, right? We can enter another long if we want to, okay? Because the first criteria it has hit, which is the EMA 20 crosses above EMA 40. So every time price touches the EMA 20 line again, is an opportunity to go for another long, right? It doesn't mean that you go for a long here and you close it at your TP2 and it's done. It's not, right? So okay, so let me just change this. This is TP2. So it's not, right? The thing is you can always re-enter the trade as long as the EMA 20 is already above EMA 40. Okay, so that's the beauty of this. Okay, next, let me give you a short example. Okay, so likewise, so this time we are using Euro Yen short H1 chart. So as you can see, EMA 20 has crossed below EMA 40. A bit tough to see, but you can see that there's a gap forming already, right? So what happened? We wait for the next opportunity for price to retest and touches our EMA 20, right? Once EMA 20 is below EMA 40. So in this case, it's at 141.10 price level. We then set the stop loss. So stop loss is our EMA 40 plus 15 pips. So in this case, for Euro Yen, all in all, from entry price to our stop loss is 45 pips. Because the gap between the entry price to EMA 40, right, is 30 pips in this case. So over here, you can see that the first target price is at 139.85 and price already hit, right, as price trend lower. So what happens is that we shift our stop loss to break even, and then we take 50% profit, right? And then we will close the trade at the next time when the MACD crosses each other, right? So as you can see, might not be great, but the idea is there, right? So we actually close our second target price at 139.30, right, as the MACD touches or crosses each other. So this is the short example. And if you guys need some refresher, right, just rewatch the video and write down the exact steps for the trigger to happen. Okay, so one short example, or the second short example is Aussie dollar short H1 chart. So as you can see, the EMA 20 has crossed below EMA 40. What happens is that we then enter a long, right, at 0.68850. Okay, so you can see that price actually gap up pretty high. So for this strategy, sometimes we might get prematurely stop out. So just look at this example. Our stop loss, because the EMA 40 line plus 15 pips, right? Over here is actually 20 pips stop loss, right? EMA 20 above is 20 pips stop loss. So actually very, very tight, very, very close to our entry price actually. But it's okay, right? We'll stick to it, right? Because just remember, every risk to reward should be 1:3, which means every winning trade, you can afford to lose 3 times, okay? So next, TP1 at 0.68250, basically 3 times our stop loss, which is 60 pips. And then, so what happened is that price hit our first target price, we shift stop loss to break even, we took 50% profit, and we continue to ride it out. And what you realize is that even though we ride it out, price wasn't as low as the first target price, which is fine, right? Which is fine. So the MACD crossover, sometimes you might not see it happen. It might be too late, or price might retrace, but it's fine, because what is important is that sometimes the crossover might happen earlier than expected, and TP2 might be at an even worse price than expected. But what is important is that you still manages to close the trade properly and in profits. Okay, so in this case, for this example, don't be shocked that sometimes your TP2 is at a worse price because you waited and the MACD crosses, right? So if that happens, just close the trade and get out, right? Close the trade, get out, and go for another trade, right? So no need to ponder or wonder, I should have closed everything at TP1, or I could have held, right? So because this strategy, this trigger, these steps is for you to follow strictly, right? There's no room for discussion, right? It is not something that's subjective, it is objective. So just follow the steps step by step. Whatever happens, you follow it, right? Don't give yourself the benefit of doubt, or telling yourself, hey, actually I could have held longer, or should I hold longer, or should I open a bigger trade, or whatsoever, right? Stick to the strategy, and I promise you, you will profit, right? All you need to do is to have a sound risk management. Okay, whatever trade that you set, for example, if your stop loss is 20 pips, right? Make sure that trade you only lose a maximum of 3 to 5%. A maximum, right? But for trade, but because for this example H1 chart, right? Sometimes you can afford I would say you can afford to risk 5% or even more, right? Because the stop loss is usually very tight. Okay. Then of course there are times that it doesn't work as well, right? So I won't tell you that, this trade is 100% winning probability, because it is not, right? I tell you safely, it is not, right? The win probability is around 35 to 45% only, right? And of course, it depends on which market and which market condition it is during, whereby you use this strategy. So for example, euro dollar, H1 chart, we went for a long, but unfortunately, the stop loss was hit very prematurely. So in this case, it doesn't really matter, because when I lose, I only lose 20 pips, like I mentioned, right? But when I win at least 3 times of my stop loss, like I mentioned, right? So which is why I say that the risk to reward ratio is very important. Your risk management is very important. The strategy that you use is actually the least important, right? As long as you can stick to your risk management, you promise me that you will not enter, or you will not risk more than 5%. You will not enter trade prematurely, or close trade prematurely, or achieve your stop loss. You'll be fine. Okay, so let's go straight to the live charts to show you some examples of the current trades that is happening. So of course, this is dollar yen. I hope that you guys can recognize, right? Over here it says dollar yen, the watermark close dollar yen as well. Actually, we missed out on the trade, right? Because you can see that price crossover here. Okay, let me just go through it straight away. Price crossover here, right? You can see that the EMA 20 crosses above EMA 40. So this is a live chart. This is a live chart. You can see that price move up higher, almost touches, or actually it touched our EMA 20 here, right? So we could have entered a trade here already. So for example, here, I'll enter a trade. Okay. So where's my stop loss? So stop loss here will be EMA 40 line plus 15 pips. So EMA 40 is at 132.127. So here we plus another 15 pips. So that will be 132.277. The stop loss, right? So 15 pips, so it will be around 132 level, right? Or 131.985 level. Okay, so this is our stop loss. TP1, because our stop loss, so let's calculate stop loss. Over here, you can see that the stop loss is about 45 pips, right? So let me make it perfect. It's easier to calculate, right? So 45 pips. So 44.9 is fine, right over here. So this is the pips, 44.9. So what is our target price. So 45 pips times 3 will be 135, right? So we just shift this. So you can see that we enter a trade here, and price is already profits, right? So of course it have not reached our first target price yet. So we will continue holding for this, right? If but of course we are late to the game already because price already moved. So also of course we will look at some other charts instead. Okay, maybe let's look at euro dollar. Okay, H1 chart. Okay, so likewise we see that there's a crossover here, right? EMA crosses above the EMA 40. Sorry, EMA 20 crosses above EMA 40. Then we'll see that price touches our entry price. So let's set it here along. So 15 pips from our EMA 40. So here EMA 40 is at 1.08234. So 15 pips, it should be around 1.0805. Okay, sorry, let's see. 8234. So let's take it as 825. So 810. Okay, so 810. So what's the stop loss? Stop loss is about 22.6 pips, or let's make it 23 pips. Right, let's make it 23 pips. So 23 pips stop loss. Entry the first target price will be times 3, right? So 23 times 3. So 23 times 3 will be 69. Is it 69? Yeah. So 23 times 3 is 69, right? So first target price will be at 69. So just adjust it 69. So you can see that we already actually hit our first target price, right? If we have entered this trade, right? So let me just shift this to the right so that it's easier to visualize. Okay, so we enter here, price our first target price, hit about here, right? And now you are seeing that the MACD lines, they are not crossing yet. They are very close, not crossing yet. But once they cross, then we will close our trade. Right. So this is for euro dollar as well. For now, definitely have missed a trade. Right. Price already moved up higher, but that's the first instance whereby the crossover happened and we entered the trade. Even if you miss this trade, right, you realize that actually you could have entered here or here. Right, there's a few instances that you can enter again, but if you enter the first one, then there's no need to enter the rest. Okay, so let me go for one more example for live. Okay, so let me see if this is a good example. Okay, so you can see price crossover, still long. I mean, it just happens so that the pairs that I'm looking at is all long. Crossover, price touches. Right, so you can see that price touches. Right, price touches the EMA 20. Let's see, because you realize that price actually moved up a lot lower. We might have hit stop loss already. So over here, 141.485, 141. Okay, the EMA 40 line. So around 141.485 minus 15 pips, which is 330. 330 here. Yeah, so for this trade, actually, we hit stop loss because too tight and price retraced too heavily, right? So, yeah, so this trade hit stop loss. But what you realize is that we could have continued entering, right? Because the EMA 20 is still at EMA 40. So if this is wrong, we stop about 20 pips. Okay, so be it. We can enter again here or here. And if when price move up higher, we could have entered again here when it touches again. Right, so that's the beauty of the trend sniper strategy, because ultimately, as long as EMA 20 has crossed above, we ride the trend. Even though we might be wrong a few times along the trend because price retraced too strongly, but like what I showed you earlier, right, is that the winning part will always be more than the losing trades in terms of percentage profit, in terms of the number of times that you will be correct, just because the market is trending in your favor, right? So that is my first strategy, which is the trend sniper strategy. I hope that this helped you, right? So EMA 20, 4D, and MACD, very simple, very objective. There's no need to guess. But what is important is that every trade you take, you should only be risking 3 to 5% or 1 to 5%. So the percentage it differs is actually up to you, but the maximum that I suggest is 5%, right? And just write the trend for this strategy, find a trending market, right? Sometimes you might see that, oh, how do I know whether it's a trending market? In the next few videos, I'll be teaching you guys how to spot a trending market, right? Basically looking at higher high, higher lows, or with one look, right? With one look and with enough intuition, you will know whether is it a trending or ranging market. Okay, so it takes a bit of common sense, but sometimes when you are very new to the market, you are unable to spot it straight away. But once you have traded long enough, one look you should be able to identify. Okay, so for this trade is a stop loss, but of course the opportunity came back again, right? For here, and of course most recently there as well. Okay. So that is all for my first strategy, right? In the next video, I'll be going through my second strategy, which is more like a swing trading. Because for this trend riding, right, it's a bit scalping intraday, right? Even though your profits is a lot, you can hold your trades a lot longer than it is, right? But we are operating in a smaller time frame. But in my next strategy, right, we are actually operating in a larger time frame, right? H4 day one, and we actually utilizes a lot of volume, right? So I hope I will see you guys in the next video.